come on in and then we'll get started. Fantastic. We'll make a start. Hi everyone. Thank you for joining us this morning. It's Chloe here from the Great British Entrepreneur Awards. I'm joined today with Linda from R&D Tax Credits, and this free webinar will give you all the information you need from who can benefit and how to claim on your innovation costs. So this session you'll learn how to get cash back on your innovation costs, and you can claim back up to 1/3 of your development costs back. And Linda will go through all the steps of what this means, how you can do it, and there will be a link at the end of the session for you to connect with Linda if you would like any further information. So this session will be around an hour long and is recorded as well. So if you do need to hop off, or if you want to view the on-demand version, that is available as well. And I'll hand over to Linda, who will be running today's session.
Hello everyone. It's a real pleasure to have this opportunity to run through the Research and Development Tax Relief and Tax Credit Scheme for the entrepreneurial community of the Great British Entrepreneur Awards. I'm Linda Ezekiel, Regional Director with R&D Tax. I'm going to run through the technicalities, but also give you a few examples, some case studies. So hopefully that will help to bring it all alive, because otherwise it can be a little bit technical. If you do find that it is relevant to your business, then great. It should mean that you'll be able to get a bit more cash into your company. But if it's not relevant at the moment, it's still really good to understand how the schemes work, because it could be relevant at any time in the future. And surprisingly, not all tax accountants do understand the Research and Development Tax Relief and Tax Credit schemes. So it's good to make sure that you have the knowledge so that if you can claim, then you get the benefits. I'm going to share my screen now. I have a number of slides. Okay. So R&D Tax Credits Explained. It's all about how to get cash back on your innovation costs, and fairly rapidly as well. The scheme is quite efficient from that point of view. And it's for founders and directors of small and medium enterprises, but it's also relevant to advising tax accountants, because as I mentioned, they don't always fully understand the Research and Development Tax Relief Scheme and don't always alert their clients to the fact that they could benefit. So I'll be covering what are R&D tax credits, how do they work, how much can you get, how do you claim them, and some examples of recent claims. But just before I go into it, I'd like to give you a little bit more background on our company so that you understand how we have the knowledge, how I have the knowledge to share with you. So we are R&D Tax, which is the trading name of Terry Toms and Partners Limited. We set up in 2012. And since then, we've supported over 1,475 companies to make R&D claims, mostly small and medium enterprises. And the total benefit to our clients is over 146 million, so a good amount of funding. And I myself have supported over 100 companies. By the way, if you have questions, put them in the Q&A and I will aim to deal with them at the end. Well, my mouse is a bit oversensitive for some reason. Oh dear. Okay, so what's the gain? The latest HMRC cost of support estimated figures for all of the R&D claims for 2019-20 was a total of £7.4 billion. So a lot of funding has gone into these schemes, and the total amount that went to small and medium enterprises, because there are two schemes, the large company scheme and the small and medium enterprise scheme. So the amount that went into the small and medium enterprise scheme in this period, 2019-20, so the fiscal year up till 31st of March 2020, was £4.4 billion, and that was 76,225 individual claims. This data was just released. There's a lag because you can go back 2 years, so there's a lag in the data. So where is the money going? Well, the majority went into, or at least the biggest share went into manufacturing, professional, scientific and technical sectors. Reading around the pie chart, the blue area is manufacturing. So manufacturing companies got 1,846 million in research and development tax relief, and the professional, scientific and technical got 1,753 million. And so it went on around the wheel. Information and communication technology, the next biggest. And as you'd imagine, those are the main sectors because we're talking about manufacturing, engineering, and technology development. And you'll see why as I go through, because it's about who can qualify. So the two schemes are the research and development expenditure credit, which is relevant to large companies. And then you have the small and medium R&D tax relief scheme for all the other smaller companies. And the whole scheme is only relevant to UK registered limited companies. So it doesn't apply if you're a sole trader, if you're a registered charity, or if you're a LLP, a limited liability partnership. So it's only UK registered companies that are subject to corporation tax that can qualify. And to qualify as an SME, you have to have under 500 employees. But the majority of our clients in R&D tax are well under 500 employees. We deal with companies from just a few employees, or in some cases even none, where they're only using subcontractors. But you also have to meet at least one of the following two criteria: under 100 million euros turnover in the relevant accounting years, or under 86 million euros on your balance sheet. And if you qualify as an SME, the benefit that you get back is between 18% and 33% of your qualifying R&D costs. So that's quite a generous amount. As Chloe said, up to a third of your R&D costs can be claimed back through the tax system. If you're a large company and you qualify under RDEC, the benefits are 11%, around 11% of your qualifying R&D costs. And I'll go through and explain what your qualifying costs are likely to be. So there's just another thing to be aware of when you're looking at whether you qualify as an SME, because if you're part of a group of companies, or the shares in your company are owned by another company, or you own part of the shares or all of the shares in another company, then you need to do some further analysis to check out whether you meet the qualification threshold for the SME, so the 500 employees and so on. Basically, you have to aggregate some of the data if you're only partly owned or partly own another company, or all of it if you're fully controlled by another company, or another company is fully controlled by your company. So if there's groups, it can get quite complicated, and it's good to seek advice. But basically, you have to add together the employees and the balance sheet and turnover values for the group to check whether you still qualify as a small and medium enterprise. And if you don't, then you'd have to claim under the large company scheme. So what are the qualification criteria? Well, it's interesting because even HMRC advisors sometimes differ in their judgment of what does and doesn't qualify. Although in the main, the guidance is straightforward. Perhaps the most complicated is the technology development, because it's such a fast-moving industry. There's always a lot of new development, and sometimes there's grey areas between what is actually innovation and what is routine software development. In other sectors, manufacturing, engineering, construction and so on, it's a little bit easier to draw the line between what is innovation and what is just routine work. But hopefully, as I go through, I will aim to clarify for you some of the what the difference is. So is the company innovating? That's the key question, because in order to qualify, you've got to be innovating. And innovation usually involves investing brain time, talent, and resources into developing something. So that might be a new product or a new process or a new service, but it has to be innovative in some way. And it's not just that it's new knowledge to your company, it has to be innovative at an industry level. So the question to ask, is there complexity in what you're doing? Is the new product or process or service development complex? For example, it requires prototyping or trials or testing, because otherwise you won't be able to work out whether you can do what you want to do. So it's not enough just to say we developed something new. It's got to be something that has some level of innovation involved in it. Or it might be just the improvement of an existing thing, not necessarily a completely new thing. It also doesn't matter if someone else has developed something already. So let's say that you set out to create something that's a very complex CRM program. Obviously, these things already exist, but if you're doing it differently or in a new way, or you don't have access to the intellectual property of another company that's already done it, then it's still innovation. So, and it can be old technology as well. So for instance, if you're developing amplifiers using valve technology, which I do have a client that does that, that would still be classified as R&D, because you're creating new products, you're pushing the boundaries of what can be done with amplifiers using valve technology. So it's not all state-of-the-art technology, it's about, are you doing something new? And it might, sorry, mouse here is causing problems. And it might also be a question of feasibility. So it might be that your technical experts don't actually know if it's scientifically possible or technologically feasible to do what you want to do until you actually roll up your sleeves and have a go at it. And sometimes you might fail, and that's equally qualifying R&D, whether you fail or succeed, because obviously the nature of innovation is that you don't always get it right, that you don't always get to do what it is you want to do. So it might be that you just don't know until you try whether you can actually achieve what you want to do. This is known in the guidance for R&D tax relief and tax credits as making an advance. By the way, R&D tax relief, R&D tax credits, those terms are used interchangeably. They both refer to the same thing, the same scheme. So HMRC refers to this as making an advance in knowledge or capability in a field of science or technology. But there's a very specific definition of science, and this is one of the most difficult areas sometimes to grasp, but it's important to understand that the specific definition for science is that the activities that qualify must relate back to the physical sciences. So that's biology, chemistry, and physics, things that you can taste, touch, smell, and so on. It doesn't apply to social sciences or the study of human behavior or the study of economics or any of those fields. So you can do innovative stuff in those fields, but it wouldn't qualify as research and development. So it has to be something that relates back to the physical sciences or software and hardware technology development, basically. So just to give you an example, let's say that you are developing a system, a training system, perhaps an automation system for training pilots, let's say, and you study how pilots behave or how people behave in stressful, potentially catastrophic situations when they have to, let's say, control an aeroplane. And you look at that and you work out content that understands human behavior and helps them to learn how to manage their human behavior. None of that would be R&D because that relates to the social behavior and psychology of people. But if you also set out to create let's say a simulator with virtual reality, so a flight pilot simulator, then that would be a physical development or a technology development. So that potentially would qualify as research and development. So it's important to understand that it's only physical developments or technology, software and hardware developments that actually are eligible for research and development tax relief. But that leaves a huge number of industries and sectors where R&D is common. So we're talking about, we've already mentioned, software applications, technology systems, so artificial intelligence, machine learning, robotics, all those sorts of things, food technology. So it might be technology to deal with how food is manufactured or how it is produced. Agri-tech, so again, agricultural systems, technology systems, and machinery. In fact, any technology development is potentially going to be R&D, but also the development of gadgets and equipment, so new products in the equipment or hardware field, electronics, new electronic circuitry, and electronics circuit boards for going into other machinery and equipment. Packaging systems, that might be systems for how to hold things safely when in transit, but it might also be the packaging itself. So let's say environmentally friendly types of plastic replacement products, or breathable fabrics, breathable fabrics that for sports and all of those sorts of things. Recipe development, so that might be food manufacturing recipes, so new recipe development, vegan recipes. We've seen a lot of R&D in the field of vegan recipes, and chemical formulas, so that could be anything from cleaning substances, washing up liquids, again, maybe user-friendly chemicals and products, cosmetics, any field where you're developing substances and materials as well. I've mentioned before, engineering design, so engineering and construction industry, there's R&D often to develop new mechanisms for building and construction, and how materials are used also in the building and construction industries. And of course, lots and lots of R&D in the field of renewable and bioenergy as well, and life sciences. We've seen quite a bit of R&D in the life sciences to do with COVID, so the development of testing systems, not to mention the vaccines, and in the farming world as well, in terms of how food is produced and how it's manufactured. So that's some of the areas to give you an idea, but there are many others as well. Sorry, my mouse just seems to have gone crazy here. Okay, I'm going to run through some case studies. I'm going to run through some case studies. That will hopefully bring it alive for you. So the first one is a brewery company. That was a boutique brewery, a specialist in beer production, creating new and innovative types of craft ale and lagers with unique appearance and taste and aftertaste. So they're doing R&D to develop the taste profile of the beers and the lagers. And also they were looking to create gluten-free natural flavorings. And there was also development done in the brewing process and the bottling and canning process. So quite a lot of R&D involved in different aspects of the production of the beer and the lager and how it was bottled and canned. And in the first year that we worked with them, they claimed 31,000 as a cash payment. In year two, 18,000 as a cash credit. and in year 3, 54,000. So they obviously spent quite a bit more money in year 3. But I don't know what's happened. My mouse is not behaving properly. Okay, virtual image software. So this was a company that was pioneering in the use of virtual image software to develop imagery for all sorts of different applications. For instance, the enhancement of images across multiple platforms, using imaging to show the unwrapping, unpackaging of products during customer proximity. So in a retail environment where there are screens showing products, or in an online environment, and a lot of other innovative stuff. And again, they spent a lot of money on research and development. So in year 1, their claim was worth £130,000. In year 2, 132,000. In year 3, 80,000. Electronic circuit board design and manufacturer. Their R&D claim was worth 6,800 in year 3, 34,800 in year 4, and 59,000 in year 5. And they were creating high quality printed circuit boards for other people in general, for other companies that were developing products. And also they looked at developing circuit boards that were less the manufacturing process was less environmentally damaging. So how could they actually develop a manufacturing process that would be kind to the environment? And they experimented a lot with the development of PCBs, very small PCBs, printed circuit boards for small pieces of equipment, and so on. So a lot of R&D involved in the pioneering end of the creation of electronic circuit boards. This one is lighting fixtures and fittings. So a company that was both developing new lighting fixtures and fittings for their catalog, but also bespoke for large scale construction. So big projects such as airports, lighting for airports and so on. And they were a market leader, or they are a market leader in the design and manufacture of luminaries. And they had to develop new lighting products, looking at how to resolve issues like how to get a certain amount of light, maybe in an exhibition area, make sure that the lighting provided a nice smooth effect, or in other cases, fitting lighting in complex, difficult underground stations, let's say, where there's very limited space to fit the lighting. So developing a lot of new products, and again, a lot of R&D in that. So their claims were between 74,000 in year 4, 57,000 in year 5, and 73,000. And it was a combination of tax saved, corporation tax saved, and cash payments. Would you believe it? Sometimes the mouse direction, same direction, goes forward, and sometimes it goes backwards. I'm sorry about that. Seems to be erratic as to which way it's going to go. I'll get there. Sometimes it doesn't even want to go at all. I've never had this before. Really sorry about this. My mouse seems to have completely decided to malfunction. I'm going to, oh no, wait a minute. We may get there. I'm just going to end the show and screen share again. Okay, sorry about that, folks. An embarrassing pause there while I tried to sort out the technology. So how are the R&D tax credits, the benefits paid? The R&D benefits are paid and claimed as part of your company's corporation tax return. So it's literally part of the annual tax return, and you can go back 2 years based on your company's accounting year end. The benefit is based on the total qualifying R&D cost in the accounting year. And we're talking about revenue expenditure, not capital. So revenue expenditure, so I'll go through more in terms of the details of that, but it's not equipment and machinery, which is capital expenditure. It doesn't cover those sorts of expenses. The benefit that you get back is, as I've mentioned before, between 18% and 33% of your R&D costs. So if you spent 100,000 on R&D in the relevant accounting year, the benefit would be between 18,000 and 33,000. So quite a good chunk of funding. If you spent 400,000 on qualifying R&D in the year, then the benefit would be between 72,000 and 132,000. And if it was £10,000 of costs, then it's going to be between 1,800 and 3,300. And to make a claim through the SME process, it's slightly different. All those figures for SME claims, as I mentioned before, large companies, it's around 11%, so a lot less. For the SME claims process, to make an R&D claim that complies with HMRC guidance, there are 2 things that are needed. You need a technical justification, a written document, which makes the case for why your projects qualify as R&D. And you also need to do a cost breakdown. So you would need to identify the total cost of your R&D that you're claiming, and also the cost per project for your largest projects. And ideally a cost breakdown per qualifying expenditure heading. And I'll give you a quick overview of what those are. By the way, just to mention, sometimes people don't submit any information, but if you don't submit it to HMRC, you are risking that HMRC will come back and ask questions, although at the moment they don't look at a lot of claims, but the evidence is that they're looking at more. I think they've come to a point where they want to make sure they're maximizing any benefits they give out, because obviously budgets are becoming critical now with all the impacts that have happened in the last couple of years with COVID. So the research and development technical justification doesn't need to be war and peace. It doesn't need to be a huge, long document, but it does need to cover what scientific or technological knowledge or capability existed at the start of the project. Because if you're saying that you're innovating at an industry level, then by definition, you need to be able to say what the situation was before you achieved your innovation. So innovation is measured against the existing technological knowledge and capability. And then what were you seeking to do? What was the advance that you were aiming for? And what were the scientific and technological uncertainties? So in other words, what were the complexities? Because if you are making an innovation in some shape or form, then there's going to be some complex things that you're aiming to resolve in order to achieve your advance in knowledge or capability. So you need to be able to say what those were in a simple form. And those were the kind of things that I was running through in the case studies that I showed you before. Those were the kind of the technological uncertainties were, can we make this circuit board to the size that we want to make it and the complexity that it needs to include? What needs to go in it? Can we manufacture an ice cream recipe? Can we create a new ice cream recipe that will achieve a certain taste profile? And how do we mass manufacture it? What different ingredients are needed and what volume of all the ingredients and so on. Those are the scientific or technological uncertainties that are involved in R&D. And then what did you do? What was the outcome? Did you succeed? Did you fail? So as I say, short and sweet is best, but sometimes it's got to be short and to the right content. I've seen many claims that are really, really long and complicated, or lots of information sent to HMRC that they didn't need and no information that they needed. It's important to get it right. So in terms of the cost breakdown, you need to look at the total cost per project for the largest projects. And the rule of thumb is if you have 3 or less projects, then you will write about all 3 of them in the technical justification and you provide a cost breakdown for all 3 of them. But if you have more than 3 projects, then ideally you would talk about enough projects to account for 50% of the R&D costs that you're claiming, and you would do a cost breakdown for enough projects to account for 50% of the R&D costs that you're claiming. If that equates to more than 10 projects, then usually 10 projects described and 10 projects costed should be sufficient. So in terms of the qualifying cost areas, these are the main ones, the kind of things that you can claim for are staff salaries. So that will be employee time spent on doing R&D, and that can include 100% of the relevant costs. So if you had a member of staff that spent 50% of their time on research and development, then 50% of the costs of paying that person would be an R&D cost, and that includes the gross salary, the employer's national insurance payments, and any company pension payments as well. So pensions are included as part of the salary cost. You may use external subcontractors such as engineers or software developers to help with your R&D. So if you use subcontractors, then you can claim up to 65% of the relevant fee that was invoiced to your company. So if a company invoiced you for 100,000 to do some work on your software, but half of that was actually qualifying R&D activity, then half of that 100,000 times 65% would be your relevant qualifying cost. The same goes for agency staff. So if you hire staff through an agency where the agency pays the member of staff and you pay the agency, again, 65% of the relevant cost of the time spent on R&D can be included as part of your R&D costs. And you can also include materials consumed. So if you wasted product in manufacturing trials, or if you wasted energy, you used up energy on your R&D, or water, or electricity and gas, or you had to throw away scrap metal, for instance, from building a prototype, so anything that goes into a prototype, all of these sorts of things are considered to be consumed items. And so that 100% of the costs of the consumables that just become scrap or wasted materials are allowable. But there's just one thing to mention, that if you're using a connected company, sometimes a company that is owned by the same people will be doing perhaps subcontracting, or maybe hiring some of the staff and paying the staff. So it's important, if there's connected companies, slightly different rules apply. In fact, you can claim 100% of the relevant costs in the connected company, provided they were invoiced across to the company that's claiming. So again, the devil is in the detail there. So you need to just make sure you get those rules right. And there's some complexity around subcontracting as well. You need to have good agreements in place. And it never works out if you have 3 founding directors of a company invoicing as maybe they're doing software development in the company that they founded, and they're invoicing across from another company that they own as subcontractors. That kind of arrangement doesn't work. There are rules around doing that, and it's not liked by HMRC, and usually you can't claim it as a research and development tax credit cost. So it's important to provide good information to HMRC each year that you make an R&D claim. I've seen all sorts of things. I've seen accountants that just put a figure into the tax return and the client doesn't even know what they've claimed for. But if you do that, then you're risking an HMRC inquiry. People are always saying to me, we've had all of our R&D claims successfully cleared through HMRC, but actually that's not strictly true, because what happens is the figures go into a tax return, and as long as there are no obvious errors in the tax return gets processed in the normal way, and HMRC hasn't looked at your R&D claim, but they may come back and do spot checks at any time. And if they do a spot check and they discover that you haven't given them good information or haven't given them any information at all, then they can make a discovery. They will call it making a discovery, and that means they can go back over up to 5, even 7 years of R&D claims. And if they feel that you've made errors, or if you've definitely made errors that they can point to, or they feel you've overinflated your claim, or any of those sorts of things, then potentially you're going to end up having money clawed back, and you may even be fined up to the legitimate amount of what you claimed. And it's very stressful and time consuming. So your best defense is to put in good information each year, so that even if questions are asked, you can defend it. And if that's the case, then HMRC can't make a discovery, and therefore they can only look at your last 2 completed years at the most. So bad claims run the risk of problems further down the line. You might think everything's going smoothly for 5 years, and then suddenly HMRC looks at your claims and says, that's not correct, what have you done there? And you can end up in trouble. So just to recap, to qualify, you must be a UK registered limited company. And to qualify as an SME, you must have under 500 employees and meet 2 other criteria to do with your turnover and your balance sheet value. And if you're a group of companies, you need to check whether the whole group needs to be added together to check whether you are an SME. For all other companies, they go under RDEC, and that's for companies with over 500 employees. And just to mention, if your R&D is subsidized by grant funding, the amount that's subsidized also has to go under the RDEC claim. You cannot claim SME funding and SME costs under the SME scheme for grant funded projects, at least the grant funded element, and sometimes the whole project, depending on the nature of the grant. Again, there's complexity in that. It's worth always getting advice if you're claiming for grant funded R&D. You must be developing a new product or process or service that links back to the physical sciences or involves technology, software or hardware. And the person to judge whether you are making an advance in knowledge or capability is your competent technical professional, not your accountants, not even your R&D advisors. We can help you take the right judgment, but ultimately it's the people that do the R&D for your company that should take the judgment, because they know what was done. They know what the baseline is in your industry. So they're the right people to make the judgment. So it must involve physical sciences or technology, and it must require innovation as judged by your competent technical professional. Just to mention that it is often time saving and more efficient, and certainly will reduce your risk if you partner with a specialist, with an expert to help you put together your R&D claims. But do check before hiring anyone that you're choosing a good specialist, as in every area, there are some very good and there are some very poor. So you need to just think about what level of fees you're paying for the level of support you're getting. They're not every company provides the same level of support, and certainly the fee levels can vary quite a bit. You need to look at the reputation and level of expertise of your specialist advisor, and you need to check if they're going to help you to save time and make the process more efficient for you. but you do have to be involved. Don't ever think that you can pass on the whole thing to your accountant or to someone else to do the R&D claim. You can't, because they don't know what you've done. They don't know what your R&D is, what activities you've undertaken that qualify. So you need to be involved to some degree. I've just put a few testimonials for R&D Tax. I've included the company names, so they're actual clients. So this one is Alternative Stuff. It's a fintech developer. This one is Bailey Fabrications Limited. They are metal fabrication engineers, so they help companies in construction industries build bridges and metal balconies and so on, and they do R&D in relation to those. Also, our company works with lots of accountants as their referral partner. So we actually take on the R&D claim for their clients because they recognize they don't have the expertise. So this is just one from one of my accountants. And there was another more, but it's gone back again. I will seek to go to the very end. Okay. Oops, I did that completely wrongly. Let's go to Q&A, and I will bring up the URL in a moment to show you where you can book time to have a one-to-one with me later on if there are other questions.
Thanks, Linda. The main question is around the time limit of the claim. So from where there's a question from Simon, is there a time limit from which you can claim? And another question from Dom around how long roughly will it take for a claim to go through? Okay, so it takes, in terms of time limits, you can go back 2 years based on your accounting year end. So if your accounting year end is the end of this month, let's say the end of October, right now you have the option of doing an R&D claim for the year ended October 2020 and October 2019. But as soon as we get to the 1st of November, that 2019 year drops off and you can do claims for the year ending October 2020 and October 2021. And that's a drop dead deadline, so you can't miss it. If you've already filed a tax return, which you will have for the earlier years, then you just simply go back and amend it and add your R&D claim. Okay. Oh, there was another part. Yes, the other part was the time frame. Okay. In terms of time frame, HMRC has a target to pay out a tax credit when you get a cash payment, to pay out a cash payment within 28 days of your tax return going in. So it's fairly rapid from that point of view. They do sometimes mess up and occasionally we have to chase them for months, but in most cases, people will get if it's a cash payment, they'll get the cash back within 28 days. And if it's a reduction in tax and they've already paid the tax, usually that comes back within that same time frame as well. Apologies, I think my internet dropped there, but we're all back. I have included a link to Linda's follow-up if you want to drop a call in the chat function, and you can do that there, and there will be a link that will follow via email very shortly to a follow-up page where you can find out more about R&D tax. Thank you very much for joining us today, Linda. Was there anything else you'd like to mention before we log off?
No, thank you very much. And sorry about the technical problems with my slides at this end. I honestly don't know what's going on with my mouse today. It just seems to be very erratic. But it was a pleasure, and I hope I managed to impart good information.
Fantastic. Thank you very much for joining us, Linda, and thank you to everyone who's joined us this morning as well. Have a great day, everybody.